Welcome back. This is TurboCharge Your Business on the #1 global business talk and news network on the internet, IBGR, International Business Growth Radio. I'm Patty Lawrence. This is episode 32, Accounting Fundamentals, Cash Flow. Be sure to go to our website at ibgr.network and download the show notes. So, what is cash flow? Again, I'm going to reference back to my little saying, which is revenue is vanity, profit is sanity, and cash is king. So, to me, cash flow is the most important aspect of your business. And why is that? Well, because without cash, you can't take your business anywhere. I always tell my clients cash gives you options. You want to have as much cash as you can in your business. And to those who are scratching their heads going, why is she saying that? Because tax maneuvers are for the tax professionals. My job with my clients is to make them as much money as they can possibly make. And then the tax professionals have to worry about tax maneuvers. And that's okay because you'll have cash to be able to pay that. That's not a problem. But cash flow, what is that? Some people get it confused with profit. Profit is not necessarily cash flow. Okay? Profit is measured by your income statement, and which we talked about in the last segment, and it really only looks at income and expenses in your business. That's all that profit does. That's all that shows up on your income statement. And it's really, really important to ensure you make money on your sales. So that profit is generated by your selling, okay? By your selling activities. It's not necessarily cash flow. You can show a profit, and this is a big, big, big note, right? Write this down. You can be profitable, but be cash poor. Let me repeat that. Your business can be profitable, but also be cash poor. Now, why is that? I'll tell you why. You can be making sales that are not generating enough cash to afford the activities that you have going on. Meaning, not only your P&L, right? But remember, I talked about those balance sheet items that we need to pay for. Think about loans, maybe vehicle loans or a mortgage. So there are cash concerns, cash items, or cash requirements from the balance sheet that you won't see in your profit and loss statement, on your income statement. But yet, you need to be generating sufficient cash and profit first, right? Sufficient profit, which is turned into cash eventually, to satisfy those cash requirements that sit on your balance sheet. So that's what cash flow is all about. Again, you can be profitable on paper and be cash poor in your business. And we don't want that. So cash flow really, so we're differentiating profit versus cash flow. So we talked about profit. What is profit? It's on your income statement. And that's all it is, right? cash flow concerns the movement of money in and out of your business, right? That's what cash flow is. It ebbs and flows. It comes in when you collect from your accounts receivable from your customers, and it goes out when you pay your vendors and your people and your loans. So it's really if you think about it in terms of like a car. So it's really functions as the gas, the fuel in your business engine, right? Because you need money to make money, right? That's an old saying, but it's true. It's true. Whether it's your money or external funding sources, external cash, doesn't matter. You need cash to make cash. All right. That's why when you opened up your business, you wrote a check to put money in the checking account. You need money to make money, right? You need that investment to be able to fuel the growth of your business and the ongoing operations of your business. So, whether you're internally generating it through your operations or you're getting some external funding sources to contribute, you need to have that cash flow. And one thing I always talk to my clients about from a cash flow perspective is, where is cash tied up in your business? And that seems a little bit of a strange question. People look at me like, what do you mean? Where's cash tied up in my business? I have cash in my checking account, right? I'm like, okay, that's a great place to start. We have cash in that account. We need that. That's operating cash, and we need that for paying bills and whatnot every day, right? We need to have that on hand. But where else could you have cash tied up in your business? Well, if you think about it, you could, on your balance sheet, we can just go down the balance sheet. You have cash tied up in your business if you have accounts receivable. If you allow your customers and clients to have terms to pay you back, then that is cash tied up in your business. It's cash to be converted. It's an accounts receivable that's going to be eventually converted to cash, but it's not yet cash. See what I mean? So if you do some rejiggering of your terms with your customers, like shortening them, and we talked a little bit about um, some of those scenarios in a prior episode. But if you shorten the time that they have to pay you back, that frees up cash in your business. That pulls cash back into your business more quickly. Similarly, if you have inventory, look at the level of inventory that you have. There are metrics out there that determine how many days worth of inventory you have in on premises, right? On your books. And what I would say to you as a business owner, do you need that level? Do you need that much? Because that could be some additional cash that's tied up in your business in terms of inventory, right? That could be freed up back into your checking account, into your operating cash, right? Those are the two big ones that I see businesses have. Now, there are other places that cash could be tied up in your business, but it's more of I call it a leaky bucket. So you're spending cash that maybe you don't need to be spending. So let's look on your P&L. You've got subscriptions that you've been paying for but you never use, right? Oh, we merged off of that platform a while ago. We don't even use that anymore. Oh, if that's the case, then you want to make sure you cut that subscription, cancel the subscription, because that money belongs back in your account, not paying for a subscription that you no longer use. Okay? So those types of things are rampant out there in the I call it the leaky bucket category. there are also inefficiencies that you might have in your business. So let's look at labor inefficiencies. If you have a service company, a service business, and you have to go out a second time to fix something that wasn't taken care of properly the first time, and I call it do it right the first time. If it wasn't done right the first time and you have to go back and do it again, perform that service again, then that is an inefficiency. In my category, a leaky bucket. So we got to fix those leaky buckets in our businesses because they're costing us not only profit, but they're costing us cash, right? Because we have to pay to have that done once again. We have to pay for that employee to go out and do that service again when it should have, that's going to double the cost. That's going to double the payroll cost. It's going to double the vehicle cost, maybe with the gas, and gas isn't cheap right now. So we need to understand what those are so that we understand what our cash flow is and how to manage our cash better. Next week, our theme is cash flow versus profit, where we'll cover mythbusters, cash flow versus profit, defining what the differences are, and examples of that, end of tax year maneuvers, and operating profit versus your tax profit. Check out my collection of free resources at turboexecs.com/turbocharge. And you can continue the conversation with me, Patty Lawrence, on LinkedIn. Thanks for tuning in to Turbocharge Your Business and Accounting Fundamentals on the IBGR Network. I'm Patty Lawrence. See you next time.